Hello, mic test, mic test. Hello, guys. Give me a few seconds while I open up YouTube and also check the mic and everything over there. In the meantime, if you are online, do type in if you can hear me. In the comment section, of course. So, I believe I am live on both YouTube as well as TradingView. What I'll do is I'll wait for a few more moments just to check if somebody who might be joining in live. 1 second. Hello, Madhavji. Good evening. So that means my audio is working here. So in that case, I don't need to wait any further and we can start now. Okay, just one last thing, guys, before I start it. Sometimes what happens is the comment section does not work on the live stream, so I'll opening it in incognito tab as well. Okay, so it looks like everything is well set. In that case, let's continue. So this will be the third in the series of these trading opportunities webinars that I have been conducting, right? And the objective of these webinars is to discuss the charts of Bitcoin, crude oil, S&P 500, Nifty, gold, EURUSD, USDJPY, EURJPY, and some other currency pairs, right? And we basically look for trading opportunities in all these things. And for this iteration, before we continue, let me just go over the legal disclaimer suggesting here that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here, you yourselves will be liable for your profit, loss of profit, etc., etc. You can read the rest on the screen. So with the legality out of the way, let me give you a quick introduction. So my name is Nirav and I'm the founder of 50 Eyes Market Analysis and the website 50eyes.com. 50 Eyes Market Analysis is the name of the YouTube channel, and 50eyes.com. Okay, so it opened up like that. And 50eyes.com is my website where I present all my work. My courses, book, Think with the Markets, and as well as my regular updates are all published on my website, right? My area of expertise is Elliott Wave, which I have been using for 6-7 years. And I have kept a track record of all the forecasts I have done publicly, as you can see 2016, my track record of forecast accuracy was 83.34. 2017, it was 87.5. 2018, it was 84.61. 2019, 84.88. 2020 is 88.52 and 2021 is 88.22. So this is what we have, a public record of my work, and it is the highest in the industry from what I have noted so far. Anyone can go there and check. And the way these things are compiled is we note down the date when the webinar was conducted, the instruments which were discussed, the price of the instruments at the time of discussion, the analysis, and the outcome of the analysis. And this is the link for the webinar. Everything that worked is given +1. Everything that did not work is given a -1. So based on that, in 2021, we had 37 that worked out of 45, bringing an accuracy of 82.22. So as I said, I'm not trying to boast or anything. I'm just showing you my credentials. They are public. And in this industry, even a 60% is considered extremely high. So I am definitely at one of the top of the industry, if not at the top in this matter. With my credentials out of the way, now let's head over to the real discussion. So as I said earlier, our discussions will be centered around the Forex, crypto, commodities, as well as indices. So basically we'll cover all the main things. And the way I like to start them is with the discussion on Euro USD. So last time when we discussed Euro USD, let me quickly open the webinar up in which we discussed the Euro USD last time. Should be inside lives. So when we discussed the Euro USD chart last time, our view was that this market has either completed a wave 4. Let me give you, by the way, a bigger time frame outlook. Before I discuss EURUSD, can you confirm, somebody in the chat, that my audio is going through and as well as video? Okay, thank you, Madharji, for the confirmation. And in that case, actually there was a spammer in the chats of the YouTube. I was just blocking him. So anyways, now with the confirmation, let's first of all have a quick longer time frame outlook of Euro USD. So in the longer time frame outlook, our count is suggesting that possibly we may have a wave 4 over here. Let me just go to the daily. Yeah, so this is the chart on the daily time frame. Let me put up the analysis rather quickly. So here, from this point of reference, around 27th May 2021, we are of the assumption that we have a wave 1 down, 2 up, 3 down, and this is your 4th up. So what is this 1 down, 2 up? This is in Elliott wave terminology, is what we call an impulse in the downward direction. An impulse in the downward direction will look something like this. So this is exactly what I have plotted on the actual chart, right? And after this 4 up is complete, this one, we will again see a movement in the downward direction, which should take the market lower than the 3 low. This low basically. So if this analysis is correct, then we are to assume, or we not assume, then we are to look at the market in regards of a continued downward movement where every upward movement is a selling opportunity, right? Unless proven otherwise, right? Within this progression, we have some other points that come into play. For instance, this wave 4 generally will retrace till the 38.2 retracement level from this wave 2 high to wave 3 low. So what I basically mean by that is that if we draw a Fibonacci retracement level from this level to this level, then the 38.2 line should be the line where this wave 4 stops. That's a generalized observation, so a guideline. Let me just draw it for you. So as you can see in this particular case, the wave 3 is coming over here. Let me draw that as well. So now that I have marked the wave 3 with this line, you can see that the market has already touched the 38.2 level and it is sort of precisely reversing from the same. Okay. So with that in mind, if the market is actually at the exactly at the 38.2 level and possibly precisely reversing from it, we have the possibility of the market moving lower than the wave 3 low, and we have possible turning points. So one way of doing a trade here would be to take a stop loss at this last high and look for sell, right? Second thing is we need to keep in mind that this reversal level 38.2 is just a general guideline. The market is not really required to reverse from this level. It may even cross it, right? So in that sense, what we can do is we can then observe this price action, this leg down, to draw further conclusions, which is what I have done on a lower time frame chart. So let's have a quick look at that. So on the lower time frame chart, what I have in front of me, okay, this is the time frame chart on lower. Euro USD N2. Yeah, that's the one I'm following. So in the lower time frame chart, I have two possibilities plotted here. The first possibility is that the wave 4 is complete here. As we just discussed, the 38.2 line was going like this somewhere here. I must have marked that as well. Yeah, this is the 38.2 line around 1.04461. First thing is, if the market is going lower, then we expect it to go lower as a possible impulse. In that case, I have considered this as a wave 1, right? And this is your A up, B down, and C up. Possibly the C is complete here. If the C is complete here, then we will call this a wave 2 and then a wave 3 down will proceed. Two possibilities again we need to discuss here. First of all, the 2 might be still continuing in the sense that wave C might be 1 up, 2 down, 3 up, 4 down, and 5 up. In that case, the 2 will be here and the 3 will move down from here. So basically this gives us a simple understanding of this market. First understanding is that the 2 is complete here. Second understanding is that the 2 might be continuing to the upside, right? In both cases, the simple conclusion is that we can just put up an alert line near the low. And once this alert line is triggered, we can then look for selling opportunities less than. So if this alert line is taken to the downside, then we can think of this market as a possible selling opportunity, right? So there's a question from Madhavji, which is, will C go above A? Yes, C can go above A. That would be the case of an expanded flat correction. But generally, expanded flat is not a very common occurrence. Generally, what you see is a running flat, and a running flat is something like this. 3 waves up for A, 3 waves down for B, which goes lower than the start of A, and then 5 waves up, which do not go near the end of A. So there is this gap between the end of A and the end of C. Right? So generally this gap is what you will see, which will be the case of an running flat. And that is what I expect is being followed here at this point in time, right? Yes, Ekolesnikov, it's going good. But I'm using the browser feature, not the OBS, which is the one causing issue. So getting back, one second. So getting back to our discussion on Euro USD, Madhavji, I think I have answered your question. The question was that can the C go higher? And as I said, it's generally less, what do you call, seen scenario. So we will go with the assumption that wherever the C may be, if it goes lower than this 1.02241, then we will come around looking for possible selling opportunities. So in that case, let's do one thing. As I just said, let's put a trigger here, and if the trigger is what do you call initiated, then we will look for sell off in Euro USD. That's my downward strategy for this market. As for the upward strategy, there is the second count. The second count is suggesting that this is an A down, this is a B triangle, and this could be the C, which would be suggesting that a zigzag correction is completed. A zigzag correction, as the name suggests, is a A down, B up, and C down kind of move. And in a zigzag correction, once this A down, B up, and C down is complete, the market then takes higher or takes off to the upside. That is generally what we think is the case in any ABC zigzag. So if that is the case, then I'm going to become serious about this count until it crosses the high of 1.03676. So that will be the case on both sides. On the downside, we have the level of 1.02246. Below that, we will be serious about selling it. And on the upside, only above 1.03676, we'll be interested in going long. So that's my clear take on Euro USD. I'll just wait for a few seconds and see if you guys have any comments. If not, then you can just type in yes or clear in the comment section, and then we'll move on to the next chart. Thank you, Madhavji, for the response. Since I am hearing clear, I'll just move on to the next chart. Just give me a second and I'll just finish the comment. Okay, let's first quickly check what was the next chart we discussed in the last webinar to maintain the sequence. And then we will obviously just go over it. So the next chart will be EURCAD. Let me have a look at EURCAD. So yes, EURCAD, when we last looked at it, we were assuming that it was possibly forming a diagonal structure. A diagonal structure in the very sense is a upward movement with 3 waves up, 3 waves down, 3 waves up, 3 waves down, and then another 3 waves up. So this is what we were expecting that this market was following. The first sequence of 3 waves is called a wave 1. Second sequence is called a wave 2. third sequence is called a wave 3, and fourth is called a wave 4, and the next one is called a wave 5 up, right? And as I suggested last time, if the wave 5 up is complete, then our what do you call the trigger for possible downward movements will be the break of this green channel line, right? There were other triggers, but this green channel line trigger is in specific more important, and it is the one we are looking forward to, right? So in that case, let's explore it by going to a lower time frame chart, right? So in the lower time frame chart, okay, it creates a private message if I say thank you after somebody gives coins. Okay. Okay. So yeah, getting back to the discussion, as I said, once the fifth wave up is complete, we will be looking for selling opportunities, and the first trigger is the break of this green channel. So let's quickly go on to, let's say, 15 minutes chart and see what's happening here. So on the 15-minute chart, as we can see, the green channel got broken here. Market went lower, right? This is all well and good, and this is a trigger for what do you call bearishness or selling. However, what I don't particularly like about this position here is that this market went above again inside the green channel. Now again, this is possible. This is not like a rule or anything that it should not go above the channel again after the break, right? But it does reduce the chances of this setup being correct. So for instance, if I were to say that out of 10, this was a what do you call 10 out of 10 confidence setup, then let me rephrase it. If the market had not gone back into the channel, then I would have called it a 10 out of 10 setup. Now that it has gone back into the channel, that reduces the what do you call likelihood of this being a strong downside setup. So now I would be a little bit more cautious, and I'll call it a 7 or a 6 out of 10, right? So it reduces my overall confidence in this setup. But overall, the idea of that this market is going to see sell off is still there, right? We still can create small sell positions with obviously this as high, but I particularly will I'll just wait and watch a little bit more on this market before I enter shorts because of the said reason, right? So that's our take on euro Canadian dollar. It is still a sell setup, but the confidence level has reduced a little bit because of the suggested price movement inside the green channel again. And nothing more to add here on EURCAD. If you guys are clear, just type clear in the comment section. If you have a doubt, obviously just put up the doubt and I'll answer that either regarding this chart or the chart we discussed earlier, which was Euro USD. I'll wait for a few seconds because generally when I speak and until you hear my voice, there is a small delay. Okay, thank you for the clarification there, Madhavji. Let's now move on to the next chart. Next chart, as we discussed in the last webinar, was US dollar, Japanese yen. US dollar, Japanese yen. Okay, so interesting one. In the last webinar, I recall very clearly our count was that this was a 1, this was a 2, this was a 3. And we were expecting this to be a possible triangle. And after the triangle, wherever the triangle we were considering, we were expecting that if the market breaks a lower level, a pivot, something like 138.99, then we will look for possible selling opportunities in this market. It never really broke the pivot, so the sells were never triggered. Secondly, more importantly, what really happened here was that the market, instead of breaking this pivot, it has gone a little bit too much to the upside. So if we were to compare this particular price action only, and we were to look at the wave 2, then the wave 4 has comparatively consumed a way higher amount of time here, right? So because it has consumed a way higher amount of time compared to what we expect generally out of wave 4s, I particularly think that something else might be happening here. So let's have a quick look at the other scenarios which I think. So firstly, what I think is that this is the A down, B up, C down. So it is possible that A, B, C is complete here, right? Let me just remove everything and make it more clear. Okay, so what I have drawn over here on the actual price action is a rough progression. This rough progression is a progression of a WXY or double zigzag. In a double zigzag, you will have the first zigzag A down, B up, and C down. So this A down, B up, and C down is called the first zigzag. It is joined by a connecting wave. The connecting wave is called an X. And the connecting wave then follows through with another A down, B up, and C down. Now, because this second zigzag is also associated, so because of the two zigzags, it's called a double zigzag. Quite self-explanatory there. So if we go with the actual chart and compare it with the rough picture, we have the C complete, we have the C complete. X is either continuing or complete. So X is either continuing or X is complete. So in that case, what we have is the next expectancy of A down, B up, and C down remaining, right? That's one of the two hypotheses that I'm going to discuss. So let's just call this one as let's call it this one as hypo number 2. Okay, so in this hypothesis 2, we are expecting that once this X is complete, or if it's already complete, then it will start the A down, B up, and C down. And if it's not complete, then it might still move up a little bit, and then later on it will again continue down as A, B, and C. So that's our quick take as per hypothesis 2. Now the other things that we want to note in this hypothesis is that when will we confirm that this X is complete? So as such, the X can become complex and it can keep becoming complex. There is no rigid rule when an X gets completed. But in my observation, if you look at the price action here, we are going to draw some conclusions from supply and demand, right? So if you look at this particular region, right, you will see or you will observe that there's a lot of price action, a lot of sideways movement here. So the market has remained or traded a lot within this region. So this region is expected to behave like a support region when the price comes back to it. So as per supply and demand theory, if there's a supply region over here, and if the market breaks below this supply region, then we can assume that the downward progression may have started. So keeping that theory in mind and applying it in conjunction with Elliott wave, if we see a price movement, let's say below this level of 139, then the expectancy of A down, B up, and C down in play becomes very high. So per se, we can just put up an alert somewhere here, a little bit above 139, so as to become alert before the actual drama happens. So with this alert in on our charts, we are already prepared, and as I just suggested, below the supply demand zone, the expectancy of A down, B up, C down in play becomes very high. So that's my quick take on USDJPY for the hypothesis 2. I think it's pretty much clear. Below 139, we will be looking for A down, B up, and C down. Now the same thing can be said in the reverse direction as well, but with lesser conviction. So in the reverse direction, you can say that actually there is no clear statement I can make here in the reverse direction. If the market goes higher, it could still be for the X, because as I said, wave X can become confusing and it can just continue to the upside. So for the upside movement, we don't have a clear setup yet. Yes, for the downside, we will be CDS below 139. No such seriousness can be taken for the upside, at least as of yet. So that's my take on USDJPY. If you guys are clear, you can just type in clear in the comment section. I see Madhav Ji has already written yes, okay. So I'll take that as a confirmation, right? 55 views, 5 online. I see the participation today is extremely low on TradingView. Same goes for YouTube. Probably I have to become more regular and do these webinars per day to bring in constant participation. Okay, so now that USDJPY has been discussed, let's quickly check the next chart we are going to discuss. Next chart will be EURJPY. The chart is the one we am. Okay, maybe this one. I'm just trying to figure out which chart is the one we are following on EURJPY. It's not the one, that's not the one. It looks like I have moved the charts here and there. And because of that, I am unable to find the one we are following. So let me do one thing. Let me just load up EURJPY 243. Yep, that's the chart we are following. By mistake, I must have closed it. Or maybe it's loaded up in another tab or window. Let me quickly have a look at the other windows. We don't want multiple instances of the same template. Okay, it looks good. So we'll go ahead, and our discussion on EURJPY was something like this. From this point of reference, around 114.534, around 7th May 2020, which is our point of reference or the starting point for this wave count. We were expecting that this market is giving a possible diagonal in the upward direction for wave C. So that will be most likely considered as a ending diagonal in play, right? An ending diagonal as per Elliott wave terminologies is a pattern which looks something like this. That's your ending diagonal pattern. Should have drawn it more properly. So something like this, roughly speaking. First leg in threes, A up, B down, and C up is called a 1. Same goes 3 waves for 2. Same goes 3 waves for 3. Same goes 3 waves for 4. And same goes 3 waves for 5. So in this particular case, we have the 1 over here, 2 over here, 3 over here, 4 over here. Now the interesting thing about ending diagonal is the 4 and 1 do overlap. So this 4 and 1, you will find that they are overlapping. You just draw that. See that 4 is overlapping 1. So if we check on this chart again, actual chart, they are overlapping. So that is the characteristic trait of a diagonal structure, right? So since we were in the wave 5th, I was assuming that maybe the 5th was only continuing, not necessarily complete, right? So let's quickly have a quick look at the 5th wave. So as I just mentioned, the 5th wave will also have 5 waves of itself within it. Sorry, 3 waves of itself, like A, B, or C. Let's say sort of like a zigzag looking correction. So this is your first leg up, A or W up, And the second thing I was assuming was that this was a B, C, D, E. So I was assuming that it was possibly continuing as a triangle for the B, and then it will go up for the C after the triangle is complete. So this makes it a sort of not so simple of a count. Long story short, what I'm trying to say over here is that my expectancy was that this market has one leg up remaining, right? That one leg up remaining should take out the last high, which was somewhere around 148.342 on this FXCM data feed chart, right? And because I would like to possibly take something like a small long position at least, I had placed an alert around 147.833, which is a little bit lower than the last high. So this analysis still holds true. Nothing really has changed. It is still possible that the B was here and that the C is already complete. Nothing relegates that, and then the market can go lower. But then again, it's not like a contradictory analysis. We are only interested in longs around the highs of 147.60, right? So it is not contradicting with our long setups. If the market really does go higher to that level, then we can expect some more upside. So that's it. EURJPY, that's the count. And one quick thing, generally after diagonal, the fall can be very, very fast. So it would be a better strategy to wait for the completion of the diagonal to the upside and then this down leg, right? To wait for this down leg will be a wiser trade because we can have a more price action to the downside compared to this counter trend upward movement. Not necessarily counter trend right now, but this small upward movement, I should say. So EURJPY diagonal under progression, possibly in wave 5th. Once the same is complete, we will look for possible shorts and until it's continuing. Small time frame longs can be looked out for. So that's our take on EURJPY. I'll just wait for a few seconds. If you have comments, just type them in the comment section. Otherwise, we'll move on to crude gold SPX. So Madhavji, are you still there with us online? And I see that a few other people have joined, 7 precisely to be online on this feed, but I'm not seeing comments. Okay. Okay, then in that case, let's carry on. Next chart, let's take crude oil. Crude oil is over here. That's the chart we are following. So on the chart of crude oil, last time when we discussed, I made a very simple statement, which was that our long setups were not seemingly working out. So when a good looking, sorry, not, yeah, there was a long setup. So anyways, the statement was very simple that if a strong long setup is not working out, then even if you don't have a clarity on the analysis, that generally leads to a good short setup. So long story short, you can just think of it as that if a very high probability scenario in the upside direction does not play out, then there is a greater chance that there is a downside scenario which we, although may not have spotted on the chart, but will play out very soon. So last time when we discussed crude oil, the market price was, let me quickly check what was the date. 2011, 2022. Okay, it was 19 actually. I posted it on 20th, I think. 19 or 18. Let me check. So it was a Friday. So 18th, of course. Yeah, so the market was around, what was the level? Let's go to a 1 hour chart. Yeah, somewhere here the market was when we were doing that discussion on crude oil, somewhere here. And the idea was that our long setup, which was that this is an A, B, C for B, and this will be up for a C. So our long setup seemed to be becoming lower and lower probability or less and less likely. And the reason for that was that we generally do not expect the A, B, and C to drag on to these lower levels. Generally, the C will stop somewhere in the vicinity of the end of A. What I'm talking about here is I'm talking about this flat correction. Let me a little bit be more descriptive. So from this point, we have A, B, and C as a flat. So this is what you call an A, this is what you call a B, and the leg down will be called a C. Right? So generally you do not want the C to go much lower than A. A little bit lower is fine, right? But in this particular case, it had gone a lot lower when we were doing the discussion. So that suggested to me that possibly the C is not really a C and this is doing something else, right? And that made me say that this long setup is possibly not going to play out, which is actually what happened if we look at it now. Because eventually the low, which was around 76.57 on this O and A data feed, got taken out. Once this low is taken out, then obviously we are now looking for sell setups more, right? So in a sense, the simple theory which I just suggested, it played out. Now, anyways, leaving the concepts aside, let's look at the actual count. For that, let's have a look at the 4-hour chart. So on the 4-hour chart, the count that I am following is that this is the first leg down for a W from this point of reference on 7th March 2022, 4th March 2022, around 131 levels. So this point of reference or starting point, we are going to count the structure. So W down is our starting of the count, and then X up, Y down, right? So this is now forming what we would suggest a complex system or a triple zigzag to be precise. In a triple zigzag, you will have a W followed by an X up, Y down, another X up, and then the last leg down is called a Z. Right? All waves are three-wave structures or corrective structures. Three waves A, B, C. Connecting wave X, three waves A, B, C for Y. Connecting wave X, and then again, as you could have guessed, three waves for Z. So if we look at this rough count as per our what do you call Elliott wave structures, we are currently in this X progression, the second X. The first X over here is already complete, right? So within the second X, the market can go a little bit sideways. Maybe it can even take this high out for a while. Not a very long time, for let's say a short instance. But I particularly do not think that that is the case. I think that this can become, one second, A, B, C. Yeah, it can do that actually. Or it can become a running flat. So the higher probability is that it will possibly become a running flat, A up, B down, and C up for this connecting wave X, and then go down for Z. Right, but that's just one take. It can, as I said, have many other scenarios. It can become an expanded flat, it can become complex in itself, yada yada yada, like many possibilities are there, right? So discussing the important thing here, so what's the setup here, right? So as I said, I particularly think that this X is continuing. Once this connecting wave X is complete, either as a running, expanded, or complex, we will then see a wave Z. So the idea I have is that I have an alert placed here. Once it is taken to the upside, then I'll paste another alert and I'll follow through for this wave X, right? I'll try to figure out at every step in or time in point, what is the progression and is the X complete, is the X complete. Once I have a possible reason to believe that the wave X is complete, or even if we don't have a possible reason, even if the price just goes, let's say somewhere here, then what can simply be done is just put an alert line at the lower levels. The precise level should be the last level, which is around 76, but that's way too low. At that point, the rewards will be there, but the risk will be very high. So basically, once the price enters around 88 level or completes for the wave X, then we can start pressing our alerts around 81 or lower levels and look for sell setups once those lower level alerts are triggered. So that's my take on crude oil, expecting one more leg down, right? Wait for confirmation of wave X completion or some clue that X is complete before taking the what do you call short stance on this market. Okay. And the lower probability scenario is that it's very low probability, but I'll just discuss it. That you can say that this is an ABC for X complete and this is an ABC for Z complete. Now, why is it low probability? Because the X does not look like a proper structure. Theoretically, it will be a zigzag, but zigzags generally do not do something like this. They generally have the A and C achieving equality. In this particular case, that does not look to be the case at all. It just does not follow the guideline of right look. So I'll not take it as a serious count. That's our take on crude oil. Very simple, what do you call, thought process here. Very simple setup. If you guys are clear on what I just discussed, just type in clear in the comment section. If not, I'll just take your doubts at this point. So I'm not seeing any further participation here. Madhavji, are you still online? Okay, I see. Explain again. So I'll just conclude it rather quickly. What my take on crude was, or is, sorry, not was. My take is that we have a possible WXYXZ correction in play, right? And a WXYXZ basically means that once this second X is complete, a new leg down should follow, and the new leg down should take out the last low of 76, right? However, the X completion position is not really known at this point in time. So the idea is to wait and watch for the completion of this X. Once we have particular reason or clues to believe that maybe the X has completed, then we can start planning trades for the Z in the downward direction. So that's the basic theme we have here for the crude oil chart. Does that help explain the situation here, Madhavji? Okay. So in that case, let's move on to the next chart of gold. To explain the actual situation, let's first see what gold really is doing on a little bit higher time frame. So on a little bit higher time frame, we have two scenarios here. First scenario is that this is from this point of reference around 11th August 2020. Our first scenario is that we have the first leg down, second leg up, or A down, B up, and C down complete. Right? If the A down, B up, and C down is complete, then this market can just fly from here, right? And the second scenario was that this C is still continuing in the downward direction. A is here, B is here, but the C is not complete here, but it is continuing in the downward direction. Now, if C is continuing in the downward direction, or is it already complete, is the only point of discussion we have, right? For that, we are to look at this price action, right? Now, if this price action is just 3 waves up, it will go up, it will come down, and then it will go up, right? And then it will fall lower. However, if it's not just A up, B down, and C up, right? Like it could then in that case be 1 up, 2 down, and then 1, 2, 3, 4, 5, or 3 up, 4 down, and then 5 up. So these are the two what you call main themes we have. One second. Okay. So to just not so before we move on to the lower time frame, I'll just explain it very quickly again. First scenario is that this is an A, a B, and a C, which will be then followed by a leg down. Second scenario is that this is a 1 up, 2 down, and then this will be 3 up, 4 down, and 5 up, right? So which one of these scenarios is it following? Let's try to figure it out on a lower time frame chart. So we have now shifted to 15 minutes, right? Here we can see that this impulse C or 3 is complete, right? So we have the first impulse up, correction, and then impulse up. So this impulse is complete, right? So now let's observe the price action after the completion of this impulse, which is the important level as well. See, after the completion of this last impulse, which was C or 3 in red, we want to see what the movement is like, right? The movement is more impulsive or more strongly biased towards the downward movement, then we have a what you call clue, not really a confirmation, but a clue that this market might be going lower. However, if the movement to the downside is not very strong and just a simple 3-wave correction, then we have a clue that maybe this market can just go and fly higher, right? So before we get into any of that, let's see what the count is from this point of reference around the level of 1786.45. So what I see here is an A wave followed by V wave, and what I have counted it as T in the downward direction. Oh, I just have to type it in. So this is my current count. I am assuming that at least 3 waves in the downward direction should be seen in a gold chart, right? Now, if 3 waves are to be seen in the gold chart, I am assuming that those 3 waves will be followed as an ABC zigzag. And in Elliott wave terminology, an ABC zigzag is 3 waves down is called an A, 3 waves up is called a B, and 5 waves down, 1, 2, 3, 4, 5 is called a C. Now, here, as I just said, A is complete over here, B is complete over here, right? And then the C leg down is what we are interested in. So let's check the count for it. So for the C leg down, we have the 1 here, 2 here, 3 here, and I'm expecting that the 4 is complete here to be followed by the 5th down. So that's my count as of now, right? And the reason for this is that first of all, it seems to be fitting in the structure pretty well. And secondly, that the wave force general guidelines suggest that it will reverse around 38.2 level. And this market has actually reversed around this 38.2 level. 38.2 level of 2 to 3 fib levels, right? So, and I'm already short on gold. So my stop loss is above this high of 1749. So in case the count is correct, the market should continue lower. In case the count is incorrect, the market will go higher 1749, then I'll exit. Simple as that. That's why I am short on this chart. If I am wrong, the stop loss is only from the current price action only this much, and if I am right, the target is at least double, right? If not more. So that's my quick take on gold, right? I just discussed the longer time frame view, right? And we will wait. We will have to wait to figure out which of the two longer time frame views is this market following. Will it continue to fly higher, or will it have more downside remaining as a third wave in an impulsive down, possibly impulsive down progression? But on the shorter term time frame, as I just said, I already have a trade in play, and the reasoning was very simple, so I just explained it to you guys. So that's about it for gold. If you guys have any queries, you can just type that in the comment section, or then we will move on to, or else we will move on to over the last chart. We can have a BTC discussion as well. So bigger target. Yeah, that's true. We can expect that, but here I believe the 3 is not the biggest move. Or let me just check. Wave 3 is actually equal to wave 1, right? As we just drew. So this wave 1 is actually equal to wave 3. So that means the wave 5 should not be bigger than wave 1, because if it does that, then wave 3 can be will be the shortest wave in the progression. Not necessarily shortest, but it is equal to wave 1, so that's not something we would like to see. So keeping that in mind, I don't think we should go for very extreme targets. But yes, we can go for 61.8 target. Let me see. .8 target is around 1730 level on this chart of FX data feed. Yeah, so we will just not want to wait too much on this downside move because of the reason as I just discussed. Okay, so that's our quick take on gold, downside target, upside stop loss, everything we have discussed. Now let's head on to the next chart. We should have a quick look at BTC as well before we move on to Nifty chart, right? Let me quickly see if something has changed. So in BTC last time when we discussed, we were of the view that this market is following this count. One second, A down and then A, B, C up, or W down for X and up for Y. Okay, so our analysis was suggesting that we have a possible B under continuation, or let's just say X under continuation. So this was our W down, A, B, and C for X. This was the A. We were waiting for the B to be followed by C for the X before it goes any further down. This was one of the two counts. The second count was super bearish. So you can just check that at your own pace in the last webinar recording, which is available on TradingView. If you go to my name and click on streams, the last webinar recording will be available. Also, it is also available on the live section of my YouTube channel, 50 Eyes Market Analysis. So anyways, you can just check that later on. But the interesting point about this particular count was that we had a strong support, not strong, yeah, overlapping fib levels support coming around 15,300 and 14,700, 700-ish levels, which was basically this level in these violet lines. Okay. So the idea which we discussed in the last webinar was that we expect if this count is being followed, this WXY progression, then we expect the wave B to reverse within this level, 15,300 to 14,700. Somewhere within this region, we expect the market to reverse for the wave C higher. So nothing new to update here. We still haven't really reached that level precisely or zone precisely. So we'll just continue to watch this market with these same levels in mind and same count on chart. That was my quick take on BTC. I do not think there will be any doubts on it. It was like nothing really special. So obviously, if you have doubts, you can just type them in the comments while I'm just going to load the chart of Nifty. So Nifty also does not seem to be playing out anything greatly new, right? Same old story here, that we have wave 1 here, 2 here, and the 3 wave will again have what do you call, same structure inside of it. It seems to have completed over here. And after the 3, we have a 4, which seems to be an A, B, and C, possibly like this. So anyways, the ideas in Nifty were that until we see a break below the level of 17,780 something levels, we do not, basically this level, we do not seem to have a very strong reason to believe of anything regarding sell side. And the clarity for longs will come near 18,422 level. So basically at the highs. However, we have a few things to note here. First of all, if the 3 was complete here, then we have A down complete here, B up complete here, and this could be considered as a 1, 2, 3, 4, 5 for the C down complete here. So with that, we can assume that this is a possibility which looks likely, because this is the general structure of flat: A down, B up, and C down. 3 waves down, 3 waves up, and 5 waves down. 3 waves down, 3 waves up, 5 waves down. So with that in mind, as I just said, we have a small likelihood that this possibly may have completed the wave C in the downward direction. If the wave C is completed in the downward direction, then we should just see strong upward movement. So again, the B could still be continuing as a complex correction. It could be going sideways, and then it could be followed by the C, right? So that is still a possibility, right? Keep that in mind. However, given the current scenario, what we can think of is we can think of stock specific actions. Basically, if this is going to be the right count, then the stocks which are going to lead the index to the upside would have already formed a much clearer setup. And with that relative analysis, we can look for plays in the upward direction on those stocks. So that's about it for Nifty. As I said, it looks like the 4 may have completed here, but there is no confirmation yet. It could just still be continuing sideways. So remain stock specific here. That's about it. Nothing to add here. And same goes for S&P's 500. Nothing really to add here. Our analysis is still the same. That we have an A down here as a diagonal, and then B up is continuing, which can be followed or should be followed by a C down. And the B up, I am assuming at this point as the possible diagonal itself. Like A down, A up, B down, and C up. So C up the B we are assuming as a possible diagonal. So once the same is complete, we'll look for possible selling opportunities. So not really anything new, almost the same as our last discussion. So that was my take on Nifty as well and as S&P's 500. If you guys have any doubts, you can just type them in the comment section. I'll just wait for a few seconds. So S&P not really down right away, like it has some more upside remaining, and B wave can go even more higher. So for the shorter time frame, we expect at least this leg up. Like if this actually is a diagonal, this is 1, 2, 3, and 4. So for the shorter time frame, we expect that there should be a leg up, right? And we expect this fifth wave up, and only then we will plan to see the shorter side. And also, as we have noted, and you must have noted already, Mandarji, that S&Ps and Nifty's correlation is not really that strong right now. They sort of are doing their own things. So I wouldn't be much surprised if S&P falls, but Nifty is doing something else. Just something to keep in mind. Okay, guys, that is about it. And before we leave, some quick things. Here is my website, 50 Eyes Market Analysis. If you want to check my industry leading track record of 80% plus accuracy for 6 years, now will soon will be 7, because 2020 is just about to get completed, then you can just go to 50eyes.com/forecast accuracy and check all this stuff for yourselves. I have a video course on Elliott Wave called Elliott Wave Course. Personalized classes if you want to learn from me. Training program LT. My book called Think with the Markets, available on Kindle by Amazon. So you can get an e-copy of it right away. And that's for my work and marketing stuff. Some few more important things. Oh, by the way, this is the YouTube channel 50 Eyes Market Analysis. Right? If you want to check the videos, and these live recordings or broadcasts are also recorded and published here as under live section. So yeah, one thing important which I wanted to say is that if you want to get updates and join in the next webinar, do two things. Firstly, follow me on Twitter. My handle is @50_eyes, right? Because updating via email is not possible. Emails, sometimes people open them after 24 hours. So on Twitter, I can just push an update like this, that join me live, the timings and date, and you can just join in. Secondly, for more important updates regarding other than this webinar, like other future projects and anything else that I release, you can just follow me on my emailing list. Email subscription 50s.com/subscribe-emailing-list. So these are the two main things that I wanted to do. And yeah, most importantly, if you have found the content in this webinar of any help whatsoever, definitely share it in your social media circles, your Twitter, Facebook. If you have some Telegram or Discord groups, share it there as well, and let us help more people, and let's bring more participation to these webinars. Lastly, the next iteration of this trading opportunities webinar is planned for Friday, same time, right? So Friday will be your 25th of November. Timing will be the same, 6 a.m. PST, 2 p.m. BST, and 7:30 IST. Same time on 25th, right? So if you could not join in and are watching it as a recording, join in on 25th. Okay. These are conducted as webinars and not recordings. So I would like to see you guys live. So that's about it for this webinar, and I'll see you guys in the next one. Thanks for joining in, guys, and definitely share it. And there's also a like button. Hit that as well. Talk soon.